Got Oliver Sloup on the line here with me. He is with Blue Line Futures. And Oliver, tell us anything you see out there spectacular.
Well, there's not a whole lot of spectacular news to talk about today, unfortunately. But coming into the report, I was looking at this as more of a shiny object report. It gives us something all to talk about, but it really doesn't offer much. And that's especially true, I think, for the corn market here, is that a lot of the numbers came within the range of expectations. But I think you could potentially, flip that into a silver lining. The fact that maybe last month's report was a purge of the bad news that we needed to just kind of flush out of our systems. We've seen exports pick up here over the last couple of weeks. This morning's weekly export sales came in at 1.2 million metric tons. That was near the top end of expectations and 25% above the 4-week average, which is nice to see. So hopefully we can continue to keep that momentum going. We got a flash sale this morning. So you're starting to see the tide shift a little bit for the corn market. Now, soybeans, on the other hand, still not all that friendly. Export sales have been dismal. The USDA seems reluctant to walk down that Brazilian crop, and even if they do continue to walk it lower, it's still a big crop, and there's really not the demand. So halfway optimistic on corn. I'm not saying that a long-term bottom is in, but I think at the very least we can consolidate here, if not gain back some ground into the spring.
It seems like we're kind of on the verge right now, and a lot of things we're kind of on the verge of finding the lows in on the corn, and kind of hopefully going to find us on the low end of the soybeans there. But we keep looking at China as one of the biggest factors out there for our export markets. We know we really need that export market. Do you see any kind of silver lining where they may be on the verge of recuperating from some of their economic woes?
Well, they will recuperate at some point, but like most things, it just takes time. And right now, it doesn't seem like that's right around the corner. But potentially, it can be. Things change relatively quickly, especially if they do start to implement a lot of stimulus. But looking at the charts, the path of least resistance has been and still remains lower. And if we take out these recent lows, if we're just kind of treading right near them, I think 1179. It really opens the door for potential retest of that May 31st and June low, which comes in 1145 to 1160. It'll be interesting to see, if low prices start to cure low prices when we get down to some of those technical levels.
Well, and I know we still got one big major event coming up, and that's going to be our March 31st planting intentions, kind of see whether or not we shift any acres from one crop to the other. Do you see anything that kind of leads you to think one way or the other?
Yeah, now that, this report, I wasn't putting much weight in to begin with, but now we're getting past that, and we are starting to move closer into spring. Heck, it's almost 60 degrees here in Chicago today, so it certainly feels like spring, and you're going to start seeing these estimates come out in the jawbone and go back and forth, and I think the market will start to price that in. I think the markets probably have been pricing that in here a little bit. I think looking at cotton acres is going to be something to keep a close eye on. We've seen a nice rally there, so yeah, I guess we'll just have to see what the analysts come out with, but certainly, every spring provides us with something new, that's for sure.
Absolutely. Well, Oliver, stay with us. We're going to go away and take a real quick commercial break on Market Report. I'll be all right. Stay with me. Welcome back to Market Day Report. Let's take another quick look at our livestock before we go into the close here. And looks like they're going to hang on to those gains right now. I got the Feb contract up 170 at 183.92. The April contract up 197 at 186.77, and the June up 165 at 183.85. The feeder market had been holding gains all day and still is. We're up 155 on the March contract, 247.10. The April up 102 at 252.22. That May contract up 72 now at 256.62. Take a look at our hog market and see what it's doing. It's been softer for most of the day. The Feb contract at 73.20. That's pretty close to in line with the lean hog index. It's down 17 on the day. The April contract fixing to be spot next week, 80.25, down 85 on the day. And out to the June contract, 94.87, down 70. I want to invite my guest, Oliver Sloup, to come back in again. He's with Blue Line Futures. And Oliver, is there anything in the cattle market or the hog market, either one, that kind of interests you this afternoon?
Well, I tell you what, the cattle complex has been just absolutely resilient to start the year and has far exceeded my expectations so far. And I've been reminding guys, it wasn't all that long ago where it was, we were falling off a cliff and you were wishing, man, I wish I would have done something up at these levels, and now we're back at these levels. So certainly looking at this rally as an opportunity to lay off some risk for those that are looking to do so. Despite some of the caution flags out there as far as the economy goes, the consumer remains resilient as well, and demand remains strong. We had pretty decent export sales this morning. One thing that I'm going to be keeping a close eye on is some of these outside markets. Looking at the crude oil market specifically, we're up about 3% today, trading at about 76 barrels a day. If we take out the recent highs and get back out above 80, I think that could potentially reignite the conversation and fears about inflation maybe lingering around longer than many people want.
Well, and there's no doubt it is lingering around, and especially with our jobs report that we saw last week, the unemployment report, that really showed a large increase in the number of people employed there. And it's kind of a toss back between, we know that some places are laying off, and we still get a hot jobs report like that. So I'll mention this real quick. I know that we had this 3 weeks worth of disruption in the distribution there of cattle. Some seem to think that that will make for a lower placement number for the month of January. I don't doubt it, but I think coming into February, we're going to kind of see those cattle come back again. Oliver, I certainly do appreciate you taking the time to be with us this morning. This is Oliver Sloup. He is with Blue Line Futures, and it's back to you, Suzanne, for one more time.
That's it. Thank you so much, Chris.
Absolutely.